to spend some time on the flow of your money and understanding that it ties in with the 411 and the 135 and your economical budget, the budget model, the economic model, and obviously your conversion ratio is what it ties in with. You need to really understand your numbers and your flow of your money so that you can keep more of your cash. Right, môre Manda, hoe gaan dit in die Vrystaat?
Môre Rolo, gaan goed, dankie.
Mooi.
Koud.
Right. Oh wow, look at us. We're all jumping on the call from all over South Africa. Môre Renatjie.
Môre Rolo. Yeah, the power's allowing us.
What is it like on the South Coast this morning?
We're battling with power. Something like 6 to 8 hours out all the time, and the pumps are not pumping water into the reservoirs, so we're all sitting without water. Wonderful, but the weather's good.
Awesome. Lovely, great to have you on the call. Right, guys, so remember in Keller Williams we talk about and we refer to you as being a business owner. You've seen those t-shirts, think like a CEO. Let me go back to my mug and bean story. You are the CEO. Then you get the admins, then the buyer agents to be the waitresses, and then the person to bake the muffins. I'm sure a lot of you have heard me as well say, let's call it a spaza shop if we have to. We don't have all the flavors, we're not going to have a sale. Now, the 135 and the 411, the 135 is your plan. The 411 is what are you going to do this week? What are you going to do that week? But then you also need to have, that's your business plan and kind of your marketing plan. Remember in Keller Williams, we refer to systems and tools. That is a tool that you use. And then you need to understand the flow of the money. And I love having this conversation because the agent starts running and then the money starts coming in and then they're realizing, no, I need to restructure this. And then to get the structuring redone is always, it's got an implication on that business of yours. So that's why it's important from day one in your planning and part of your 30-60-90. The power of the 30-60-90 is because we reevaluate it. It ties in with a season and a quarter. So a financially troubled business, and hear me out, business means money. In the MREA, there we go. I'm going to refer a lot to the MREA this morning. We are talking about what is the point of putting a rand and you're going to get a rand back? If you put a rand, you want to at least make sure that 1 rand gets to a 10 rand. That's why we are in business. It must make money. So a financially troubled in a business creates an environment that inhibits opportunity and growth, reduces your effectiveness. What I call with naps time. It takes sleeping hours out of every hour of your day. And I'm going to say the following again. What is your hourly rate? So that you can know whether you are busy running around with the wrong income producing activities. And the moment that there's financial trouble, it's like it gets stuck here on your subconscious, at the back of your mind going, the bills needs to be paid. There's no registrations. I'm going to take out of Rolo savings account to make Rolo Realty happen. So eventually I eat out of, let's call it Rollin. Let's play this game. The Rollin savings, the bank, the big savings, is now eating for Rolo's Realty. Creates unneeded stress. You all know and have had that experience. If you haven't had up to here in your life one day of financial worry or where the next cent or rand is going to come from to produce, please phone me. I'd like to know your secret. Or please, I do apologize if you're a trust fund baby and you've got a Roland Armour bank account that can provide every month, né? And it's expensive. It is expensive if a business is in trouble and there is not a cash flow or a Roland Armour bank so that Rolo Realty can operate. To go and get this money from an ABSA or a Standard Bank, you're going to pay an interest rate. There's going to be fees involved. And I'm going to repeat what my father said to me once. You do not borrow money to make money. You put rand for rand. And that's why we need to understand the flow of the money and where that money must go. And because, a lot of the Keller Williams training is referring to a 30, they talk about quicker conversions because it's 30, 45 days maximum in America or anywhere else in the world, argumentatively. Then the property is yours and we move on. In South Africa, it is slower. And if you calculate all the public holidays and the school holidays and the winterization that commission-driven people go through, your 12-year cycle is actually effectively a 10.5 year. So if we really want to be hard on it, we need to make it a 10-month because of the implication of the wasted time of quicker conversions in the deeds offices on registrations. A financially sound business, you don't have a worry. If Roland Armour, the ABSA, the bank, is worthy X amount of millions, and when Roller Realty needs to have some money there, it's way cheaper option to keep it going. But you need to replenish it all the time. You can't run a year later and Roller Realty owes Roland Armour 100 million rand. That's not going to be the plan. It means somewhere in the activity or in the planning or in the cash flow, something is not working. Because we all want that security and that comfort that comes from a financial sound business. Because eventually, that Rolo Realty must pay Rolo a salary, and it doesn't need Roland Armour Bank to keep it going. And it frees you up to have that career worth living, careers worth having, lives worth living, businesses worth owning, legacies worth leaving. Do not reinvent the wheel. That's what I'm saying. As part of the belief system of the Red Book is, what our plan is for you to achieve in 1,000 days. The cash flow plan and keeping every cent of your money accountable. Pages 158. Wait, let me give you the exact pages here. 100 and MREA economic model. Write this down because you need to go and refer back to this, please. The pages we're going to talk about is pages 175 and up to pages 183. The big one that you can highlight is figure 35 on page 184. Right at the bottom, the 4 conversations. The big issues of the economic model in the millionaire real estate agent is red light, green light, lead with revenue, keep every cent accountable. I'm going a little bit back in the MREA because we've got, and that's part of this winter warmer shift training is what to say to your clients is pages 9, 10, and 11 in the shift of the shift book. But understanding that you need to understand your money. The smart way to run a business and the positive outcome is keeping more of your hard-earned cash. And You know, there comes a point where you don't have to work for money. Your money should start working for you. And that is what I love about the Keller Williams models again. We've had there's the four models: elbow, the economic model, lead generation, budget, and organizational. Then Gary brought in the fifth one, which is the expansion model. The expansion model goes about team sold. That is a Peter Maritzburg business. And then there is team sold, the Umhlanga Belito business. Then there's team sold like the Joburg Midrand team. Kenny is in a way already set up like that. That's why I'm using you as an example, Kenny. So Kenny is already in expansion as a fifth model. Kenny is already set up as an entity for the flow of the money and the people in the teams, if I can use it like that. So there's a point where your business should work for you. That 1 rand is now not only outputting 10 rand, it is now outputting 15 rand in the flow of it. Right. So my discussion is the flow of the money, so that you can understand how it is set up in Keller Williams. So a lot of you have just got your personal bank account and then the deductions happens or the money goes in there, or you do your taxes directly from there. Yes, I get it. That is the flow of it. We want to restructure it because understand, Keller Williams, is a real estate service provider to you. So Rolo Realty has got Keller Williams as a service provider to him. Rolo Realty, the company, has got a service provider to him, somebody that makes all my boards and my business cards, has got telephone expenses, the petrol, the car. I'm going to show you all of these things now. So from day one, understand you can either be a sole proprietor, be called Rolo Realty, IR Armor ID number, trading as Rolo Realty for starters, just so that you keep the money separate. Or you can be a PTY limited, which is ideal in future if you are planning to expand your team and your successes. Then you're going to have people like an admin, so you are going to start having expenses like pay as you earn and SDL skills levies and UIFs and those things. So when the time is ready and you've got a cash flow, then you should become a PTY. The giants people that are on the team, so your market center, you will have an invoice based system that we are going to discuss now. But normally, and this is what I want to say, is the MREA is referring to the following. Page is 174. If you are a single agent, Rolo, that is running as an agent in Pivot, you should plan your cash flow 30% net expenses and 70% net profit. 30% expenses, 70% profit. Why? Because that cash flow money in that 70% is what is going to create the sustainability for you to get an admin. The moment you start getting an admin, according to the organizational model, page 193 there's the figure on in the MREA, then you need to be then a PTY. So you can start running on a savings account that is a trading as Rolo Realty, Rossi Realty. It's just for your own banking and understanding the flow till you then change into an entity when your team grows. Does that make sense, or does anybody want to ask me a question? Because the moment Inay, the floor is yours. Please talk to me.
So if you refer now to a PTY Limited, does that mean you have to register with company registration like a CC? Okay,
No, species doesn't exist anymore in NICE. So you're going to be a PTY. You
okay,
do it online at SIP. And there's already agents that have got PTYs. It doesn't change your FFC or anything like that.
okay.
It is just for the tax benefits
Yes.
and the flow of money. Because when you are going to grow into having an admin, the MREA says you first have to get an admin, then you get a second admin, and only then do you go to a level 3, page 193, and then get the waitresses, the buyer agents. I hope I've answered you, Inay.
Thank you, it's clear.
I've put in there independent contractor because for now, your money goes straight as per invoicing into your account. And as an independent contractor, you're sorting out your SARS affairs. I get that. But we want to talk about the growth and the flow of the money. It's very important to keep the flow of the money accountable. So there is the business accounts that you're going to sort of set up and under your banking profiles. And it's important as a business entity to keep sort of protecting your money and understanding the banking structure. So there's a business check account. When you are the PTY, you're going to have a check account. For now, as a sole prop, till you grow, you are going to create one under your profile that's called Inay de Vries Realty, argumentatively. Then there's the business savings account. You know that 32-day notice accounts? Those, because we have to hide money there for the tax cycles. I've put in there a business credit card because it is just so functional for people to swipe their petrol card and to use the credit card for entertainment when they go out with clients or lunches, or some places they order their business cards and then they swipe the business card. Look, if I say business credit card, it could also be the business check card, argumentatively. Your personal living account, where Inay de Vries, director of Inay de Vries Realties, salary gets paid in. Like I will have the Rolo Realty account, the Roland Armour Bank, and then there is the Rolo the Peanut, where he needs to pay for cigarettes and when he wants to buy a Blue Sea or take Shawnee for lunch. Although when I take my husband for lunch, it is a business expense. So understand your bank accounts, and then personal tax savings account. Again, it's just a simple account that just sits there so that when the money and the flow comes in, that savings account goes the tax in, and the business has got its own account. Does the account setups make sense? Or any questions on that? Right. Now the setup. Many agents use QuickBooks or Pastel or any of that accounting software. And it is professional. It keeps track of it. It is simple reporting so that you can keep your money accountable. There is a simple option of a 50 or a 60 Rand. And when I'm going to now show you the spreadsheet to help you with the cash flow planning in your business, then you will understand where that 50 or 60 Rand charges you monthly, which is going to go off the Rolo Realty business account. Your profit and loss monthly, and I'm going to show it in the spreadsheet. And it's simple. How much came in, how much went out, and what is left? Cash at the end of the month. It's a business. And this has to be reviewed every month, every week for starters. Your balance sheet. How many listings have I got left is part of the balance sheet. How many leads did I add to my business that I'm going to convert? That's part of almost the balance sheet. That is why the key tracking your numbers all the time is so important. How many leads, how many appointments, how many listings, how many contracts for the week, and what is the profit at the end of the week? And then it's the month. Use the MREA budgets for planning. So you're welcome to go and check it. I'm going to show it on the spreadsheet because that's exactly how I've broken it up for people to understand it. And then what I want to say there, point 6, is the 70-30. Carla Price, Agent KW Giants. 70-30 split until you cap. You all know that story. So look, I'm now using the models. And then out of the 70 to her, 30% is expenses, 70 of that is profit, part of the cash, so that we can plan to be ready when we grow into the admin. Right, so I just want to stop sharing this one for a second and then go to I was on a smart plan. Let me just close these windows. Sorry. Share a screen. Okay. Let's share a window. Can you all see my screen there?
Yes. Yes, we can.
Thank you. Right. So this is available in the agent toolkit. If you want to pop me a message and I can either quickly send it to you on WhatsApp or whatever. Email as well. So this spreadsheet is self-calculating. And I have found that it works very well. Listen to what I've seen so many times happen with the agents. Whatever you resist, persist. Now, if you've looked at your areas, you've done the calculations, you know what the stock is, you know what the conversions are, and what your probable income is going to be on the stock value in your shop. Now, this sheet is really on one screen. If you, sorry, make it smaller, you can see the flow of your money. How, and you can keep every cent accountable because the 25th of every month is happening. So what the sheet is doing. So let's say Soul Road is going to register in September and you're going to get your 50,000 Rand is going to land in your bank account. You see it automatically then updates the cash on hand. Now, do not round the amounts off. You need to keep every cent accountable. So it's cut up. The top part is where all your incomes are going to come in. You just keep adding the street and when it's going to happen. Your growth share, your company dollar share, rental income. You can put lines and change it that it is specific to you. But the percentages we are referring to in the MREA, we've sort of South Africanized it and broken it up here into your personal expenses and your business expenses, because when you're going to grow in that team and that PTY, you are going to do the 30-30-40, 30% fixed expenses, 30% costs of sales, That's shared expenses when we share a deal, and then 40% net profit. And this cash flow, this spreadsheet, this agent cash flow spreadsheet prepares you for that flow. So when you that 30, 30, 40, and what's great is because it is a Google sheet, you can just copy it into the next year. I always say, remember, we prepare for that 1,000 days when we're going to walk into Dragon's Den and say, hello, yeah, I'm Rolo's Realty. Here's my 3 years cash flow. Here's my 3 years 135411, which is my business and marketing plan. This is the value of the reporting that I pull from the system. Can you please put £100,000 into my business? And here you're going to put in the car payment 5041. And then you're going to put in the bond. Let's say your bond is 8 grand. You know, your personal expenses is still there. Your car payment is that. Your medical aid, your cell phone. The salaries is going to start happening with that admin. For now, you just want to be aware of your personal expenses because that needs to eventually go to Rolo's account where he pays for the medical aids and those things. The phone, Wi-Fi, and those becomes business expenses, which then starts moving over here. But when you are a 70-30, where you single agent need to be 30 expenses, 70% profit. I've put in there EAAB, computer expenses, marketing and boards, your Keller Williams fees. So what happens is that, let's say you spend R1,000 on petrol. That becomes later business expense because for now it flows into your sole prop. So when you draw it across, this is what the power of the sheet is. It changes the cash flow position at the top. That way, you know exactly what your flow of money is like for the year. How much the budget is, can I spend on petrol, and then the business is going to grow into that. The boards, the Keller Williams fees, the etc., etc. Then eventually you can also, in all the income and in the sales, we will be able to determine which month is your capping date, so that the transactions that needs to move forward so that it can affect your anniversary and your capping date, because the real profit is in the difference between the 70 and the 92%. Does that make sense? Any questions here? Is this spreadsheet a handy tool to help you to understand? Because once you even see how many listings you've got in an area and what the lightstone in that area is, and what will your market share be to earn the 800. What I love about the sheet is, at the same time, what it also does is, yeah, it's already got the VAT and the pay as you earn. Those are going to become separate lines. That's why we've left it open there. But just so that you can start getting into the planning of how much must go in there. Then there's the debt payments that you can put in. And then payments to be made, accounts receivable, because you know you would get your child's renewal for varsity fees or something, which is a big bulk amount that needs to be there that month so that it can calculate, or there's so many options I can think of that needs to happen, because it needs to affect Rolo Realty's cash flow. Like family reunion ticket, a year-end function is now happening in November. I've got flight tickets, which is then that business expenses that needs to stay with Van Castricum Realty, and then Renee is going to draw from there. Is this helpful? What I like about it also as well, that it you can see the flow of your money all on one sheet. People don't like filling this in because then the reality hits. You're gonna see there's gonna be a line here that you're gonna make red, called Roland Armour Bank. Because every month Roland Armour Bank, the red line, must keep putting income into Rolo Realty? Please talk to me. Yes, there's a raised hand. I'm going to have a look now. Oops. You can talk. Sorry, my screen and I are just having a little bit of a misunderstanding. Please keep talking.
I think that agent's flow sheet is very, very comprehensive, and it keeps you accountable. I really like it.
Thank you, Renee. Guys, let me tell you. Thanks for sharing, Renee. That the flow of the money is important, because once you fold it in and you look at it and you're gonna go, wait, this is what needs to happen in reality. And then you look at your stock. It is a little bit of an eye opener. And then that six personal perspective start eating in, like, maybe I need to be a little bit learning based and start learning how to do the scripts better, or start talking, or maybe this is the better answer to attend to things. So again, whatever you resist, persist. And no business has ever succeeded if it doesn't have a plan nor a cash flow plan. Let me just warn you that. Please go and Google what I've just said. Right, let me just open this screen. Okay, there we go. Anybody else that wants to talk or share? Right. It's gone very silent in the room. So, tax planning for the self employed. Understand the power of business deductions. And I've seen this, and please be forewarned. Familiarize yourself with it. That learning base that I keep talking about, the six personal perspectives, the SARS website is great about it. As a sole prop, understand what are the benefits of me using X space in my house, 30% you can deduct. My phone expenses, my petrol expenses, and we're going to look at it now. And then calculate the self-employed tax, the sole props. There is calculators on SARS's websites. Please use those two to your benefit, to understand when Heather sends me this template invoice and this money lands into Inai de Vries Realty, when it disperses from there, that we're going to look at now, what will the implications be, and that true number. Use your profiles on SARS, please, because make tax filings, pay on time, and get help from a tax advisor. And I'm pausing there for a reason. Please speak to a tax advisor and be aware of what their expense is going to be. So, like, you need to plan for your FFC renewal, your tax person as well, and that you are on top of your filing at SARS. It is to your benefit as a commission or business owner for your e-filing when you're applying at any bank loans. You know, the banks are so smart. You can only present your SARS filing to them, and then they give you loans. I myself are personally really not an expert at it, and I'm going to say, Your Honor, I'm guilty. I've got accountants and people that are helping with it, because they structured it between me, Shauna, all our things. Be on top of it, because it's got an implication on your cash flow sheet at the end of the day. And it's not everybody's favorite topic, the tax thing. Like I've just said, Your Honor, I'm guilty there. So the business deductions, you've seen it there, is the car payments, the salaries that you are going to start paying towards the admins as you're expanding into a PTY on page 193. Coaching and education, like the fees you are paying for any external trainings, the monthly Keller Williams fees or invoices from Heather is deductible. Equipment. Some people have got computer hire on their to have the best printing that's on the call. There's some that have got phones and extra devices. All of those Vodacom bills and those things should be to your benefit, to your tax deductions in your business. Advertising. Facebook ads that you are doing under your page, there is an option where you can download it. It also shows on the credit card statement for the business account. That's why it's important to really have your INAI realty that flows to INAI. There's so much more. Anybody else that knows of anything else they would like to share on this deductibles? So the money flow. And it's a recommendation that you flow it like that because it takes 1,000 days for a new business. That's why when you are a commission earner, they ask a year's bank statements when you apply for a home loan. When you're self-employed and you've got your own company, they're going to ask you for 3 years financial statements, and they're going to ask you for 3 years bank statements. So set it up already from day one like that you can just print from that that account straight in de Vries business account information. And it's net commission into the business check account. Like I've just said, I say now business check account, 70% to personal account should be as you set up from the 70-70. 30% to remain in the business account. Remember, when you're a single agent, we talk about 30% fixed expenses and 70% net profit. So on that sheet, you'll see it's already grouped like that to help you grow into that. So from the personal account, you cut to the savings tax account. And then from the business account, later on, it will be the pay as you earns and the UIFs that goes from there. Any questions from it? So it first goes into the business account, and then from there to the personal, and the things get paid and saved from there. There's the troubled flow of marketing, a flow of money. So now Heather pays into INAI de Vries personal account, and then INAI pays then to the business account where the phones and the petrol and the boards and the monthly Keller Williams fee and the extra Facebook ads and the board at Seaward Estate Gate must go off. Because once it's in nice account from there, but must first go into the business account, and then the 70 that lands, 30% stays in INAI de Vries. The other 70 goes to INAI de Vries's personal account. And then I've put percentages just there as an example. It could be different, depends what brackets of taxes you are on. Then it goes the business taxes, the personal taxes, and then into the wallet of whatever the medical aids and the private things for the blue season, the dining and wining is. Does it make sense, or does anybody want to ask me a question on the flow of the money? So there's a little bit of silence in there. So what to do next? Very important. Get a great tax advisor and plan that expense. Put all your financials into the spreadsheet and then into that software system. And get your business entity and your plan sorted. Don't go and run out now and go and order all of these, go and register PTYs and things like that. You can run it as a sole prop because it's easy, that sole prop bank account, just to run from there when it becomes a PTY. But then at least there's a track record of everything. Get rid of personal and business debt. As you keep, and that's what I loved when COVID happened, and we had the bold training and we worked through the shift book, and in the bold training we were talking about cut expenses, and once you've typed in that spreadsheet all of the expenses, you're going to see maybe your bank charges are exorbitant, or maybe you are paying an unnecessary debit order for a thing that is not needed now. You need to keep every cent in your life accountable, because instead of rather having all this life insurances and you're only 21 years old, but you have got credit card debt of 100,000 Rand, we need to talk about your moral values here, please. Then you and I need to have a little one-on-one that we can talk about. There's no point in paying 2,000 Rand a month on life insurance. You're 21 years old and healthy, but yet you owe on your credit card 100,000 and the interest on it alone is 3,500 Rand a month. Get into the habits to review that financial plan of you the whole time. Transactions move. All of a sudden, I don't have the money for the electrical certificate to pay for the 21,000 quote for the electrician. You planned it to register in September. Now it moves to December. What happens? The capping day gets affected. Roland Armour Bank has to finance again Rolo Realty, and then that money needs to go back the whole time. That's why you need to revise it the whole time and get informed about the tax laws. I'm going to arrange training with other attorneys and tax advisors to talk a little bit about this, because there's a conversation that comes up the whole time when the invoices happen, like all of this money in my account, and then I need to put some money away for SARS. And then people run into trouble when they need tax clearances, etc. Number one. Number two, clients, your consumers, buyers and sellers, are asking questions about capital gains tax, etc. And those things, you are not a specialist. You can always say, and that's why I want to empower you with script, and that's why the training will be there. I'm not a specialist, but I have attended this training from whoever, and that is what was mentioned. Please refer to your tax practitioner, but this is the probability. Any ahas, anything you're going to do today, please talk to me. Does this make sense for you to keep your money accountable and to experience that income? Because under that line where it says accounts payable or paying debt, you can even put another red line there into extra savings account and start budgeting money to go into Armour Life Dreams savings account for Sean and I to please go to Brazil or whatever. Please talk to me. Who's going to do what?
Rolo,
Yes, please talk to me.
FNB has a great account. It's called First Business Zero. So there's no banking fees, unlimited free swipes, and you get free accounting software as well on it.
Say again that. I'm learning something. Rossi, is it FNB?
Yes, FNB. So dis 'n hulle noem dit First Business Zero. Jy kan dit sommer net online gaan opstel, dit vat 'n paar minute. En dan
awesome.
het jy free accounting software, geen banking fees nie en free unlimited swipes.
Wow, thanks for sharing that. Well, there we go. Yes, FNB is I'm using it as well. Thank you, Manda. Donkey Rossi. Guys, the rest of you, remember FNB, they've got an option where you need to set up the account for the flow of the money. And important, please, that tax savings account, because you need to hide that money till it's payable on your e-filing. Anybody else that has got anything to share wants to talk to me? Inai, the floor is yours. Please talk to us.
You know, I just have to say that I've never been registered on e-filing because the agency used to do it automatically. And now it is, last year it was, you know, with COVID and the agency closing, the tax advisor submitted the returns, and then he would say X amount was payable. So I'm not quite sure. I've never been registered on e-filing.
You see, there we have it, Inai. It's a great thing then for you to investigate this. Go and have a look on their website. And read. If you register and log in, you are going to see they're actually quite amazing in their responses. That's a big aha for you to please look into that, my Skatani. If you get stuck, let's talk to me about a tax practitioner. Let me help you, or Heather. We can assist you with that if you get stuck.
Thank you.
There was another one year Manda was talking about phone expenses. On their SIM cards are a lot cheaper as well. Oh, on the FNB, I think Manda's referring to, I think I saw that in the window when we were the other day walking in the mall, that you can get a cheap SIM card under your banking profile, because we are spending so much time on the phone. Yes, I saw there's so many packages that sort of as a pay as you go, and you reload minutes and then you just keep phoning, and that should be under your business expenses from your business account as well. Well done. Thanks, Manda. Anybody else? Awesome. I appreciate you this morning. Thank you for being on the call. And next week, Tuesday, it looks like I'm going to be okay as well with the load sheddings. How successful people get the most out of 24 hours. I think it's going to be another nice topic to wow it and be gearing it for July. Thank you, everybody, for everything in June. We've really, as Pivot, had an amazing June in our numbers and in our success story. If there's anything Heather or I can do for you, let me know. Be strong, be great, and have a great July. Thanks, team.
Thanks, Rolo.
Thanks, Knox. Thanks,
Dankie, Rolo.
Renee. Cheers, Yella.
Thank you, Rolo.
Thanks, sweetie. Cheers, cheers.
Dankie Rollo. Sien weer.